We've been bullish since the break back above 16,275 to 60. So we've seen 92,685 per coin. A lot of other bullish calls in here. However, we did just hold an exhaustion level up here between at 108,205 to 109,060, and we held that with a 108,960 high and have rolled over 5,635 so far.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Michael Moore, Moore Analytics, is with us now. If you're listening on the podcast, if you go to the show notes, click the link, you can download all the relevant charts and follow along. Michael, it's great to have you back on. Markets have definitely been hyperkinetic recently. Why don't we start out with gold and get through Bitcoin, all the good stuff, oil. Tell us where we're at.
That's good. Okay, so the gold, the last time we were on, it's been a little while, but was in July, and just wanted to update you on some of the larger calls that have been made back then. I had said that the solid trade above 2147.50 to 2148.40 projects us upward at 151 minimum, 954 plus maximum. And that's when we were trading down around the 2502 area. We'd already reached a peak at 2560, but we went on to attain another 260 per ounce after you and I had talked. So those bull calls are all on hold currently. A lot of different levels of bull calls. We got bearish a couple of days ago. I'm dropping down to a 60-minute chart. Can you see my screen okay?
Yep, we see it fine.
We got bearish when we broke that down below this line right here. That was the trade back below 2745.90. We've seen 99.8 of pressure from that, and then other bearish calls below 2685.20 and 2673.50. And now we're sitting right on top of another formation right here. A decent break below that formation will also project this downward. That's going to come in at 2648.80 plus 1 per hour starting at 1:20 p.m.
So you think we're still going higher?
In general, it's still bullish, but all the bullishness is on hold right now. Currently, I'm bearish, and I expect this will continue to come off. If this was to trade back up above this formation right here, which is going to come in at 2680.30 plus 1.8 per hour starting at 1:20 p.m., that would warrant of renewed strength and a possible run back for the highs again.
Okay, interesting. So,
want to jump to the S&P 500?
Yeah, let's go to the S&P and see what we got there.
So the S&P has had some great moves in here. We have been bullish. You've done interviews with me a number of times over the years. If you go back and look at past interviews with me, you'll know that I've been bullish since holding a macro exhaustion level at 3502, and we've rallied 2,644 handles, 0.5 handles since then, and a lot of other bullish calls in here. One that I've been updating for a while has been the break above 2678.50, which I said would project this upward 240 minimum, 570 plus maximum. We've attained 468 of that so far, so we haven't quite hit the maximum yet. And currently, we're in between two formations as we speak. The break above this upper one right here, which is going to come in at 6151.31, minus 14 per hour starting at 1:30 p.m. That will project this upward 50 handles minimum, and the maximum is not really determinable, but should definitely take us out and take up highs. If we fell back down through the lower line right here, which is going to come in at 6116.26 plus 5 per hour starting at 1:30 p.m., that will project this downward 30 handles minimum, 70 plus maximum. And by the way, when I say 70 plus maximum, I know that's confusing, but certain formations have certain projections, but I say plus because obviously if you're trending in that direction, you could see far more.
Sure.
Um,
I get that.
okay. You want to take a look at the Bitcoin and then we'll go to the futures?
Yes.
The
Let's take a look at Bitcoin. Are always big on Bitcoin.
All right. Well, Bitcoin, if you go back and look at some of the past interviews with you, you can see where I've made some of these other longer term calls. We've been bullish since the break back above 16,275 to 60. So we've seen 92,685 per coin. A lot of other bullish calls in here. However, we did just hold an exhaustion level up here between at 108,205 to 109,060, and we held that with a 108,960 high and have rolled over 5,635 so far. If we were to fail back down through this formation, that's going to warrant a decent pressure meaning likely multiple day. That's going to come in at 101,223 plus 26 per hour starting at 1 o'clock p.m. Eastern Standard Time. We break below this lower formation right here, which is going to come in at 98,525 plus 21 per hour. That'll project this downward at 11,000 plus per coin. And just so the viewership understands, an exhaustion area is an area that the market can probably halt its trending in that direction and then start a bearish correction. Sometimes it'll hold temporarily. Sometimes it'll cause a full bearish correction. So we're only in a piece of it now. But if it does see a full bearish correction, it should be at least double what this is right now, probably down here to the 97,500 area.
So what do you think its upside is here at this particular point? We're like 105,000 or so, I think it's at, right?
It's at 104,985 right now. What do you mean? What do I think the upside is? I mean, it could. I mean, I'm still overall bullish, solid. All that's on hold. Still overall bullish and bullish right now, but within that bullishness, we're seeing a pullback from these highs. If we break back below this line, all that bullishness goes on hold, and then we're bearish below that. But sky's the limit on the upside. I mean, who knows where this is going to go? We're in brand new territory up here. So, but the space above that, I'd be aware of possible. Actually, never mind. So,
what's the best way to invest in Bitcoin, in your opinion? You buying options on it now, or how do you do it?
Well, the Bitcoin futures are quite large, so you'd have to have a lot of capital to really trade this. You can trade the minis or the micros. I believe they have micros on these, so you can trade 1/10 of it. So, and the benefit of doing that, as opposed to just buying some other coin out there, is this is an exchange-regulated futures market. So that's backed by the clearinghouses, then it's backed by the exchange, and then it's backed by the U.S. government. So it's liquid, and if you have an account set up and you're trading this, you can get out of this almost instantaneously on the upside or the downside if you run.
Yeah, we like liquidity, of course, but I realize we're just doing technical analysis here. We're not looking at the fundamentals. Not that there are any fundamentals for Bitcoin. It trades strictly on emotion, right? I mean, it's not. There's no there are fundamentals in that there can only be so many Bitcoins mined, right?
Right.
But in terms of there actually being a fundamental of production and income statements and cost of goods sold, cost of services, this is strictly an emotional product here, right?
I couldn't speak too much to that, to be honest with you, because I don't really even look at the fundamentals. I don't look at the fundamentals that much.
There aren't any.
Even of the energies and the gold. And it's not that those things are not important. The fundamentals, for instance, in gold or energy or the S&P, even whatever, are the underpinnings of what drives the market.
Mm-hmm.
Period. That said, the technicals will get you in on those moves 90% of the time earlier than what the fundamental picture will avail itself to be.
Gotcha.
And it will also get you out of those moves 90% of the time earlier also. That's setting aside news-based events. News-based events, I mean, right before Donald Trump was elected, that evening before, the S&Ps had come off. Actually, I'll just show you real quick. That was right here. Right here. We've broken back above this line, and this was on 11/5 on November 5th at 11:30. And I'd sent out on my post-market podcast that I just turned bullish. And I think I got elected right after that. And this is not a political statement or anything, but obviously the market showed you what it thought of that election as far as being good for businesses or not. So,
wasn't the market saying all along, though, that he was going to get elected?
Well, no, I mean, this has been sliding down here, for a while. I mean, from October 29th down into November 4th, the market was in a slide and a pretty steep one. But again, this was also technically based. We broke below this line right here. I got bearish and we got slammed right down into here. And we held major support levels. And then when we broke back above this line, that's when I got bullish. So again, I'm not trying to sound irresponsible about saying that I don't pay attention to the fundamentals. It's just that I pay attention to the technicals, and the technicals are a representation of all the knowledge of all the traders trading that market at that time. And they usually have a better handle and feel on the fundamentals than anybody else does. So the technicals, they're just more reliable to me. Over time, I've been able to make a far more better production.
I get it. Couldn't agree with you more. I'm a big believer in it. Cycles and such. So, but do you feel like after the election, the sentiment really changed?
What's that? Do I think what?
After the election, the sentiment in the market really changed?
I mean, I think the market, I mean, you can't just say, well, it goes up for certain presidents and down for other ones, because that's not really true. I mean,
that's not realistic.
But just short term, it was definitive as to what it thought about his election or other parties not being elected. So that was a pretty definitive. I mean, the market would not have just rallied just for the heck of it. Not that much. I mean, you could say it would rally because the uncertainty of what's going on in the market is taken out of the way. I can understand that, but that's pretty strong. That's a lot of people putting a lot of money back into the market because of their confidence. So, you want to take a look at the crude real quick?
Yeah, let's take a look at crude. Sure.
So the crude oil has really been chopping around. You can see this consolidation phase we've been in here really since the beginning of October, and in a pretty tight band between 65 a barrel and 71 a barrel. We just turned bullish today, and just on an overall basis, we have been bullish since April 29th of 2020 from $15.37 a barrel. We'd rallied 115.13 a barrel, and a lot of other bullish calls in there. That's all on hold. And then then we got bearish on the break below 119.15, and that brought in 55.51 of pressure. So a lot of other higher time frame calls are on hold. We had just gotten bearish yesterday because we'd broken below this formation right up in here around 70.14. That says right here. Oh, actually, we held exhaustion up here first at 71 even, and then rolled over $2.19. Then the break below 70.14 brought in $1.33 of pressure before holding this exhaustion level right here at 68.85 with a 68.81 low and bouncing. And now that we've taken out this formation on the upside, this is further bullish now. That line's going to come in at 70.16. As of 2 o'clock, it moves up very slightly. A further break above this line above should also bring in strength. That's going to come in at 70.81 plus 2 per hour starting at 6 o'clock p.m.
Okay. All right. So any other markets you think we should cover that might give us an idea where we're heading?
Yes. By the way, just as an overall standpoint on the energies and the natural gas, and this is political, I think that in general, you should see, without any major blowups in the Middle East, I would expect that the pricing would come down because under Trump, I mean, he put out a lot of natural gas, a lot of home production of the energies, and brought a lot of that pricing down, especially for gasoline and stuff.
You know what I saw?
Break below this formation down here. This is a pretty significant formation. That comes in at 66.95 and moves up very slowly, maybe just 1 cent a day.
So really,
that'll project this downward at least $4 a barrel and as much as $10.
I saw a really interesting stat that during Trump's term in office, oil production and nat gas went up between 40 and 50%. And interestingly enough, during Biden's term, it continued to go up, but it was only up 2.5 or 3% production. So if we see another 15 to 20% increase in production, which I think is realistic, because one of the things, like I said, we're getting into fundamentals, which is not your thing, but I think you can see it in the charts, is that the administration, the current one, put a lot of pressure on banks and markets not to finance drilling.
Yep.
And that's all going to be gone here. I mean, you can see the handwriting on the wall, which Exxon and the big oil companies are happy restricting production because they know they'll get higher prices. But the wildcatters out there, the smaller producers, the frackers, now they have a new process called refracking. They go back to the fracked well after it stopped producing. They refrack it. It produces even more than it produced when it was originally fracked. So if they've got the capital, then we're going to see potentially tremendous expansion in oil produced. Right now, we're producing a record 13 million plus barrels a day in the United States. Maybe we'll get up to 20.
I mean, it would just be a huge boon for us. I mean, does it make any sense for us to why would we be dependent on other countries for our oil? Well, we to get all these South American countries in the Midwest. I mean, the Far East and Russia. I mean, why? That's just it's ridiculous. And not only that, but those are real jobs for people, not jobs that are from the government.
Those are 6-figure jobs.
Exactly.
Even the guy that washes the cars, the trucks, is making close to 6 figures in the Permian Basin, and up in North Dakota too. It'll be a boom. Plus the potential Keystone Pipeline, another boom for oil production and gas. We're just our own worst enemy a lot of times, Michael.
Yeah. Incidentally, if you notice here I won't get into the unleaded gas fully today, but we don't have so much time. But I had said in here that on 5, is after significant bullish reversal below. This one right here, I said that I know we broke above a significant formation at $1.2307. This projected this upward 26 cents minimum, 96 cents plus maximum. And it just so happened that I made that prediction right before Biden got into office. And right after it, you can see, this is the effect right here. If people want to know what the effect of policy, and again, I'm not trying to be political, but this is effect of policy of shutting all that production and stuff.
Yeah.
I mean, your gasoline at the pump went from $1.25 a gallon to $4.32 a gallon, and then roll over.
And then with a lower oil price, then we can rebuild the strategic oil reserve, which they've been using to manipulate prices. And really, Michael, the strategic oil reserve, it's good for like 40 days worth of oil supply in the U.S. It's nothing. 1 billion barrels. It's nothing.
Why would we not have that security? Why do we do away with our own security? It's just ridiculous.
And the Greek tragedies, you're your own worst enemy. And in this country, we got everybody else as the enemy and ourselves. How are we going to survive this? Hopefully things turn around now. Michael, tell us where we find you on the web.
Okay, let me just pull that up real quick. You can go to Moor mooranalytics.com. That's spelled MOOR, analytics.com. And
All right. Link is in the show notes to this interview. Don't forget the link to all these charts is in the show notes. Just click it. I've got it in a Dropbox link. You'll get it right away. And Michael, appreciate you coming on. Any questions, comments for Michael? Write me an email, kl@kerrylutz.com. And the link to moreanalytics.com is in the show notes to this interview on financialsurvivalnetwork.com. While you're there, we just ask that you sign up for your free newsletter like 60,000 other FSN community members have. Michael, always appreciate you coming by. We'll talk to you again soon.
Thank you very much. I appreciate it, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.